Hello and welcome to Edison TV. Today I'm joined by Tim Fung, CEO and founder of Airtasker, a company that operates a marketplace to enable users to outsource a wide range of everyday tasks. The company is well established and scaling in Australia, its home market, and is now building its business in both the UK and in the US. The company recently announced a $6.5 million Australian dollar investment into its UK business from Channel 4, which we'll talk to later. The business is listed on the ASX and it's capitalized at around $75 million. Tim, many thanks for joining us today.
Thanks for having me, Dan.
And could you start by introducing the business and perhaps touching on why Airtasker is different from other consumer marketplaces that we might think of?
Yeah, so first of all, thanks for having me. So Airtasker is a marketplace that, in really, really simple terms, connects people who need work done with people who want to work to earn some additional income. We focus on the local services space. So a little bit differentiated there from things like Fiverr and Upwork that predominantly work in the global outsourcing space. Airtasker is all about local community and local services. Now, in that space, Airtasker differentiates by being open and infinitely horizontal. What do we mean by that? First of all, open marketplace, it's a community-based product. Think of it like Gumtree, but with profiles, payments, and insurances to make sure that things stay trusted and reliable. The second thing is that Airtasker is infinitely horizontal. So rather than focusing on one category of services, like say cleaning, or a bunch of services like home services, cleaning, gardening, and handyman jobs, Airtasker is really about the breadth of any kind of job that you can imagine needs to be done. And there are many, many jobs that fit into this category, whether it's cleaning up after a party, whether it's on a face painter for your kid's birthday party, or whether it's moving boxes up the road to help your small business. Airtasker can help with any of those kinds of jobs.
Understood. And can you discuss your market position in Australia? And in particular, marketplaces tend to be network effect businesses. How did Airtasker go about breaking down those network barriers to build your position in Australia?
Sure. So Airtasker in Australia sees over 200,000 posted jobs per month and creates over $250 million in gross marketplace volume, which is the value of the jobs going through our platform. That makes us the leading marketplace in Australia, where we have competition from platforms that are similar to some of the UK platforms like Rated People or Checker Trade. They exist in Australia too, but Airtasker is the number one marketplace by the number of jobs going through the platform each month. How did we build this two-sided marketplace? So at the beginning, it was all about focusing on having an experience which is instant gratification for our taskers to be able to just jump on and I need to make some money now. It's a very low friction way to be able to earn money rather than going through things like the Yellow Pages or Checker Trade, where you have to pay money up front to join the marketplace. Airtasker was jump on, look at all the jobs right now and go for your life. So that's how we started on the supply side of the marketplace. On the demand side of the marketplace, we invested a lot into building Airtasker's brand and story. So because of Airtasker's interesting jobs, we get featured in a lot of news stories, whether it's people lining up to get the new Air Jordans using an Airtasker, or whether it's someone being a Prince Harry lookalike for a birthday party. These are all jobs that happen on Airtasker. And so we naturally get the PR buzz and people want to talk about it because Airtasker is relevant to what's happening in the local community. A few years into building in Australia, we partnered with a company called Seven West Media, which owns the biggest free-to-air television network in Australia. And during that 5-year partnership that we had with Seven West Media, we were able to grow our brand awareness from roughly 10% to something like 60%. We were able to increase our marketplace volume from about $12 million a year to about $150 million a year. And our revenues 20x'd in that 5-year time. And so in the UK, where we're still earlier on in that journey, we wanted to repeat that success. So we partnered up with Channel 4 and the ventures team there. And shortly, we're going to be going to market in a big way and essentially trying to paint the town Airtasker blue.
Thanks. And expanding on the Channel 4 partnership, can you discuss how that's going to work? You can certainly see some interesting titles like Taskmaster and so on, where there would be natural synergies, but also discuss how that agreement should generate value for both the shareholders of Airtasker as a group and for Channel 4.
Sure. Well, what we noticed when we reflected on why television was so successful for Airtasker in Australia, and why we think it's going to be exciting and relevant to really scaling in London, is that we saw that television enables us to build a network effect quickly. So compared to online channels, they may be more efficient in some ways, or you may be able to like dribble out the marketing, but television allows you to build instant critical mass scale very, very quickly. Very important for a network effect business. The second thing is that television in your living room is very much about trust, and it makes the brand, you've got to have a certain level of cachet and relevance and rigor as a brand to be able to create a really high quality production ad and put it on television at home. And so there is still that brand trust that's built by having a television advertisement. The third thing is that so much of the content that goes on television these days is about home renovation, or it's about, fixing up your home. And so you mentioned shows like Taskmaster. There's also Grand Designs, a lot of these sort of like renovation shows. And what Airtasker did in Australia is that, we were able to really become part of the vernacular and build what we call like a household name. And so that's what we're doing over there in the UK with Channel 4. And we're super excited about the different kinds of content that they have on Channel 4. But the deal did only just get signed about 2 weeks ago. So we're very much in the early stages of that. But putting in £3.5 million or 6.5 million Australian dollars into marketing in a short period of time is definitely going to move the dial. And we're really excited about what that opportunity brings. You mentioned before a little bit about like how the exit might work and how we've aligned the interests of Channel 4 and Airtasker. So what I believe in is the most important thing in partnerships is that everyone's aligned to wanting the same things, and the incentives are really important. So what we've done is in this investment, Channel 4 is investing into Airtasker UK. And what that means is that Airtasker's head office, our global head office, gives everything for free to Airtasker UK. All of our software, all of our know-how, all of our brand IP, etc. And Channel 4 is adding the £3.5 million, $6.5 million of marketing in exchange for 20% of Airtasker UK. Now, in 5 years' time, Airtasker's global head office has agreed to acquire back that 20% in Airtasker UK back from Channel 4. Fantastic for Channel 4. You get a guaranteed exit and a great opportunity there. And the way that we're going to value Airtasker UK is to take Airtasker UK's revenue, but multiply it by Airtasker's global revenue multiple. And what that means is Channel 4 is super incentivized, of course, to get our Airtasker UK revenues up, but they're also incentivized to, help us make sure that Airtasker's global story is really, really working well. And by doing that, everyone wants the same thing. Everyone wants Airtasker Global to go well. They want Airtasker UK to go well. And since we own 80% of Airtasker UK, we're happy whichever way that goes. It's risk mitigated on the downside, but it's a huge opportunity for Channel 4 on the upside. So we think it's a great partnership, a structured arrangement.
Thanks. And now turning to the US, obviously the market opportunity is huge over there, but it's also a market where we see many companies overextend themselves. Can you talk about your strategy in the US and how you manage that risk-reward profile?
One of the things that is quite unique about Airtasker's business model is that we truly are a platform and a community-based model. So as we go into new markets, really we're delivering our software, and we need to make everyone aware of Airtasker's platform. But what we don't do when we go into new markets is set up big operational teams, set up new offices, buy real estate, all of these sort of fixed costs. It's very much, we have an app, we're taking it to each new country, and then we need to market the hell out of that app in that new country. So for example, We have a very lightweight team in the UK. We're doing more than £4 million. We're expecting that to triple this year in the UK, and we're doing that with 0 staff on the ground in the UK. In the US, we have 3 amazing staff members on the ground in the US, but it's a very, very lightweight team, and a lot of it comes to like, how do you do the marketing? And so as we go into these new markets, what we found is finding local partners on the ground, like Channel 4, like Seven West Media, enables us to share that risk with a local partner and have that local partner really help us to start to scale the business. And so since we're investing into having a world-class software application and platform anyway, that's effectively a leverageable asset that we can take to each new market. But we do need to make sure where we could get tripped up, and I think it's entirely fair that people look at, our investors look at, what investment do you need to make into that market to succeed? It's all about finding the right partners and doing it in sharing risk with local partners. And so you won't see us, dump tens of millions of dollars into that market until we've got the right partners on our side who can help us scale into that market and to share risk with us, and also share upside with us too.
And now turning to the financial profile of the business, can you discuss the financials of the business as they are now? And as a business, you've set the target of reaching cash flow break-even by 2024. What needs to happen for you to reach that break-even point?
Well, where we maybe if I just take us back a couple of years as to the profile of Airtasker's business. In 2019, we were on a run rate of burning about $25 million per year as we scaled that business up from 0, covering all our fixed costs and to build up to over $100 million in volume. We did in 2019, we made the prudent call to say, you know what, now's the time to stop burning all of this cash. We don't want to be an Uber model. We don't want to be any of these sort of like cash burning machines. And that's not what our model is. We're a community platform based model. We invest in great software, and then we let people do the work through our platform. And so we actually, back in 2019, turned the business around into positive operating cash flow in the period of about 9 months. So we went from 25 million burn to the operating cash flow positive very, very quickly. We were about $5 million of positive operating cash flow in FY21. Of course, during the last 2 years of there being a boom time in the software application space, we had a lot of money coming in to the business, and we started to burn some additional cash as we scaled very, very quickly. This year, we've actually, made that call again. We just got to go back to what we were doing in FY20. And so we've pulled back and we've done a restructure, which resulted in about 20% coming off our headcount and off our cost base. Really hard thing to do, letting go of great, amazing Airtasker team members, but ultimately the right call to make sure that we're cash flow positive into the new year. So we fully expect to be cash flow positive in FY24, and we're absolutely on track to be doing that. And that's actually with quite a conservative growth profile. We'll still achieve that cash flow positivity. What we think is some great potential upside is the UK growing ahead of plan. Potentially some of the macroeconomic pressures are coming off in the next year. Some of those other tailwinds that could help us do even better than just break even on cash flow. But with still $20 million in the bank at the end of the last quarter, we want to make sure that we're still operating cash flow positive. We've got that buffer, and we're in a really strong position going through what could be a challenging next 1 to 2 years.
Thanks. And now looking longer term, what sort of financial profile should we expect of this business as you gain critical mass in more geographies?
Yeah, well, look, I think one of the most interesting things about Airtasker is the strong profitability of the economics. So if we actually just take out our Australian market right now. So in Australia, we're growing at 40-50% year on year. This year will be our EBITDA that we're generating in the Australian market. It's about $20 million. So if we take off all of the revenue that we make in Australia, and then net off all the marketing that we do, all the staff that work on Airtasker Australia, basically all of the costs associated with that marketplace, we're generating about a $20 million EBITDA in Australia. That's before all of our head office costs. The head office costs, of course, are where there's a lot of expense, a lot of investment going into technology, into product, and these different things. So the financial profile is that how do we amortize those fixed costs into the software that we're going to be spending anyway? How do we multiply that into new countries and replicate that economics of the $20 million of EBITDA that we can generate in Australia? Because if we can do that once or twice more, I think you're going to see how high operating leverage Airtasker is as a business model. And that's why unintuitively, it makes total sense to be scaling into the UK despite the difficult current macro circumstances, because it's all about getting more leverage off this great software application that we've built in Australia and to sell it to more people. And I think investors are probably going to be pretty surprised when they see how the economics of each country sort of works. To be profitable in a new country in a very, very quick amount of time while still scaling rapidly is absolutely possible. We've done it before, and we're going to do it again in the UK and the US.
Tim, really interesting. Thanks very much for joining us, and look forward to following your progress as you move along your journey.
Dan, thanks so much for having me.